Did SEA's tech venture capital miss the encryption craze? In 2018, Thedamat Beak firm Intudo Ventures was in its usual hunt for US-based Indonesian founder Swanitmat Jessotoyo. At the time, the Harvard student was starting a cryptocurrency exchange called Pintu. Like Ilmostilil Fitzpearson, Intudo is not seeking to land a deal in the cryptocurrency space. However, Soetoy shy degree of conviction, passion, and market fit for Indonesia convinced the firm's partners stole at Pintus initial financing round in March 2019. Representations of cryptocurrencies, Ripple, Bitcoin, Ethereum, and Litecoin own a peak motherboard/photo credit. Reuters. Today, as crypto-related sectors like blockchain, Web3, and the metaverse appear to gain steam, Intudo is still anomaly. Itas own only a handful of conventional tech weeks in the region that the crypto firms in its portfolio. When pincherized $35 million Series A plus funding round in August last year. For example, Intudo's own a phone Latois conventional tech weeks and the company scap to be of 11 investors. The week from Wazel Sethian Leon from Southeast Asia, with Pintus 90 other backers being US and China-based crypto fund. This is for firminous elated KC in the region. Tegenasia data shows that Southeast Asia's crypto startups collectively raised funding from over 150 investors last year. Of these backers, only 11 are conventional tech weeks based in the region. The C includes Singapore's Vertex Ventures and B Capital, Indonesia's BRI Ventures and Intudo, and Thailand's SCB, 10X. There is dairy mostly global VC firms specializing in the cryptosphere, such as Coinbase Ventures, Pantera Capital, and Alameda Research. Different ballgame for Intudo founding partner Eddie Chan, the limited participation of local tech VCs in the crypto space is not surprising after all. The nature of crypto investing just market different compared to venture investing. For example, pure play crypto companies, he explains, often like to build part-arounds, fundraisers where many investors participate to build off 10 down they lead backer. These firms seek out investors that can provide access to tailbackers and have a larger global following. Typically, the allocations into these rounds are as multiple with a larger number of participating investors, which makes it difficult for VCs to build positions and requires that they employ a more index-based approach to investing. Through a portfolio company is managed also differs significantly. Traditional tech VCs usually focus on maintaining and growing positions in promising companies over an extended period until la majority that like an IPRMA. For crypto firms, however, investors may look to liquidity early on or watch trading activity to time sell-offs, operate in more like hedge funds assist the case. Managing these companies requires a different set of skills and timeline expectation. Intudo Ventures team/photo credit, Intudo Ventures. Then, there are also differences in due diligence. In the crypto space, the due diligence process is skewed toward the qualitative analysis of a founder's capability to build a project or the evaluation of potential token pair. A Farkry firm has usually approach a deal. Investments in crypto firms often come before the company has generated a revenue and require significant conviction on a week's bar before the comet, much like a putting money behind a start to praising gap or seed round. This means seed stage investors may have an easier time crossing over than their latter stage peers, Chan says. While a disparity is very apparent, Sequoia India believes crypto projects and businesses have fundamental similarities with tech ventures. For example, Web3 and Web2 companies, which deal in new versions of World Wide Web, are not too dissimilar in the way they scale and design their product, attract and motivate, and how they build all the long-term business. Lots of lessons from Web2 can and should but akin to Web3. And many of the ideas we see coming to Web3 are from Web2 founders who deeply understand that domain and can apply concepts from both to build something unique, says Sequoia India Managing Director Shailesh Lakhani. Several venture capitalists in Asia spoke at a point to investment mandates from limited partners as a main obstacle to crypto deal making. For regular VCs, crypto is usually not part of team mandate, says Adrian Hartanto, partner at Arise, a fund co-managed BMD Ventures and Finch Capital. In his own fund, Hartanto session negotiates with Elsto just theme and data so his team can invest more freely in crypto and blockchain projects. The size of expects several office peers will take. Thofnotaloft hem will successful in jetting up approval. Those that they tend up sticking with their existing mandates will have their instead as Ferris invest in crypto companies is concerned. Some, however, may invest in a minimal amount, which is usually allocated for opportunistic deals outside their mandate. Head. For the most part, Irene Umar, co-founder of blockchain focus edging startup YG Jesse recognize Escalange. A former venture capitalist herself, Umar said many and investment committee is off from swood scratching their heads at the idea of invest in gin tokens as opposed to Ikiti. Picking preferred partners according to Umar. The lack of deals in the crypto space from traditional tech VCs may also down to the startups themselves. Crypto deal serial was oversubscribed, she says, so startups shave at the luxury of picking their preferred investors, and they would usually go for it if they favor knowledge in the sector. Crypto startups would see investors that can help connect them to exchanges and tokenomics experts, so their tokens can global. They will be looking at what crypto ecosystem the investor has, Umer says. This is particularly true of fairly stage companies, says Alex Spanovic, co-founder and CEO of Nansen, the crypto analytics startup, for example, saw crypto-native investors for its seed round, hoping they could help the company grow within the industry in its most recent round. However, Nansen onboarded strategic partners to grow beyond the crypto bubble and February der market. These include top conventional Vixuches Excel, GIC, Andreessen Horowitz, Tiger Global, and SCB10X. The Nansen team, photo credit, Nansen. Vainavik believes that Manatik Vikshab bin Slodom avine to the crypto sector due to several factors, including regulatory issues as well as Salakof understanding of emerging business models. However, Heezy Shenzhen think horizon, as 2021 weighs a tipping point for mainstream VC investment in the space. Pinto Soatoyo shares this view. Having worked with Intidoant, more recently, Lightspeed Venture Partners, Soatoyo says non-specialized investors can help grow and scale businesses in valuable ways. Many non-specialized investors have taken a strong interest in crypto, have even established crypto-specific funds, so I believe we'll see more involvement from them as well, he says. Community over capital enough he first mainstream in Southeast Asia to C2PAC crypto fund disciplines Space Ventures. The Singapore-based firm, which counts Gojek, Bioformus, and Helidokas portfolio companies, launched a $30 million crypto-focused fund earlier this month. Called Ocular Crypto, the fund invests in fund managers and Web3 projects, including those that thought deal with the creator/ownership economy, infrastructure and tooling. While mandates a global mandate, Ocular says open space deprits in Southeast Asia putin an equal position to tape into the region's in crypto ecosystem. Another Vic firm that has also embraced Web3 deal-making, albeit through a different route, is Indonesia's BRI Ventures. The Vikarma state-owned bank BRI. The Vic firm struck a partnership with Binance-backed crypto exchange Toka Crypto in January to launch the first blockchain-focused accelerator in Indonesia. Successful applicants will not only have access to business mentoring but will also receive a partnership support and investment opportunities from BRI Ventures, Toka Crypto, and their affiliate. BRI Ventures see a lingo partnership with Toka Crypto launch Indonesia's first blockchain accelerator program /photo credit, BRI Ventures. For aspiring crypto startups, working with local VCs like BRI Ventures will help them unirth more local cases, as well as network and market access, says BRI Ventures CEO Nico Wijaya. It's true thought the Verena Sharif Web3 startups make easy to see Toba Global from Dan, but they're a group of adopters scamba local. The size where technology off local visas much more valuable, says Wijaya, host from invested in YG Jesse last year. Ultimately, Vesta Tusk remains full-fledged crypto week shady stronger pont ecosystem and access to deal flow. For example, Thetamet Singapore-based blockchain founders fund speaks at on average 3 to 4 blockchain or emerging tech events to increase deal flow, according to its principal Tobias Bauer. Additionally, the firm also receives references to high-quality projects from its over 70 existing portfolio companies. Amid such domination, it becomes important for specialized weeks to win the attention, respect, and approval of founders. The best way to do this is through being involved and immersed in the community, Wijaya says. Ocular Visa President Temizeo seconds this view. In crypto, capitalist middle wasting, communities, she says.